The next 32 days will determine the fate of altcoins for the rest of the crypto bull market. What the Federal Reserve decides to do in October will either make or break this cycle. In this video, I'm going to break down what is this decision the Feds have to make, what's the best possible outcome, and what will happen to altcoins if we get that outcome. If you're excited to learn more, like and subscribe down below, and let's find out just what is going on. So the big question right now is the Fed going to cut rates in October? We have a FOMC meeting at the end of the month in October coming up, and we need to know if the Fed are going to continue on the rate cutting cycle. Now, typically, the Fed does not do just one cut, so we have that going for us. That being said, Powell's cut last week was data dependent. It was a cautious cut. It was a risk management cut, meaning that the risks to inflation are still high. They're still concerned about inflation, but the risks to the labor market are starting to become more significant. And so really what we have is a shift in the balance of risks. The Fed was worried about inflation and they weren't so worried about the labor market. Now they have to worry more about the labor market and kind of bring inflation lower on their concern list. So that means they're going to cut rates to help strengthen the labor market, even if it means inflation might tick up a little bit. Their concern, as we've said on this channel multiple times, is tariff-driven inflation. We've seen really not a whole lot of inflation come through due to tariffs, and so the Fed is willing to look through that a little bit. Their main concern now is the labor market, and unless we see significant strengthening in the labor market, I think they're going to have to keep cutting. And so I got John Lonsky here. He's an award-winning economist. He's going to break down what he thinks the Fed has to keep an eye on. Have a listen.
The most concerning development in the U.S. economy has to be the near disappearance of jobs growth. And unless we have a resumption of jobs growth that is satisfactory for the purpose of avoiding a stalling of the U.S. economy, the Federal Reserve has no choice but to continue to cut rates.
No choice but to continue to cut rates. I like his enthusiasm. I feel the same way. Now, the labor market, we have to see continuing strength. What about inflation? So we did have a PCE report come out. Have a look on your screen. We've got the August 25 PCE. This is personal consumption expenditures. This is the Fed's preferred method of inflation to look at when determining what they're going to do. And we had it come in at expectations. This is great news, actually. It means that we're not seeing inflation above expectations. And subsequently, the chance of a rate cut is now close to 90% for October. So we're looking very good here. And we even had a former Federal Reserve President, James Bullard. He thinks that we're on track for an October rate cut. Have a look at what he has to say.
On the inflation side, there's no surprise here. So that seems to be very consistent with the committee's story that they'll be able to look through inflation and then expect it to fall in 2026. So I think this leaves everything on track to have further rate cuts during the next two meetings of the FOMC.
So we're on target, we're on path for an October rate cut, and this is big news for us because more rate cuts means more liquidity. Have a look, this is the dot plot. This is the summary of economic projections. This is where the FOMC participants give their predictions on where federal funds rates are going to fall. So it's anonymous, and so they project where they're going to end up. We had one person say that we're going to hike rates before the end of the year. Boo. We had 6 participants think that we're getting no more cuts. Also boo. 2 predict 1 cut, and then we have 9 participants predicting 2 cuts, which is nice. And then one person said we're going to get like 1 million cuts, which that's Stephen Miller. We can guess who that is. That's Trump's guy, but we'll talk about that later. So we've got 9 FOMC participants who predict that we are going to have 2 rate cuts by the end of the year. And since these cuts are likely going to be data dependent, Powell came out and said, we're cautiously dovish. This is a risk management cut. We're managing the risk to the dual mandate. There's 9 FOMC participants who I believe foresee the labor market staying flat or maybe even weakening. I don't think they foresee labor market strength off the base of 1 25 basis point cut. So as far as we can tell, we are on track for an October rate cut, which is very bullish. That'll be the second of the year. And then hopefully we can stay on track for another cut in December. If you stay up with this channel, if you're subscribed down below, we will continue to keep you up to date on the rate cut developments. Now, Why are we so excited about rate cuts? Let's get bullish. Why are we excited about rate cuts? Rate cuts means more liquidity, more borrowing, and more risk on behavior. Because if the Fed funds rate is at 4%, I can get 4% on a safe investment. If that goes down to 3%, now I'm only getting 3% on my investments. That makes me want to go risk on. And so more risk on behavior, more liquidity into the system means higher altcoin prices. And you can see here that altcoins do well. You can see Ethereum does very good. Ethereum is really, I think, what's going to lead the altcoins into this alt season. We see Solana doing well. We see Bitcoin obviously doing very well. We see gold and silver doing okay. What's promising here is that Solana, Bitcoin, Ethereum do better than really everything else in terms of liquidity. And so coming over to TradingView, we can see the effective federal funds rate and M2 money supply. We have the Fed funds rate here in white. We have money supply here in red. And so right here, when the Fed funds rate fell off a cliff, we had a rapid rise in M2. And then as the Fed funds rate increased, we saw M2 actually taper down a little bit. Now we're starting to see the Fed funds rate taper down, and we're starting to see M2 tick back up. We're seeing a connection here. Lower federal funds rate, more rate cuts means more liquidity because more borrowing is happening. If you're making it cheaper to borrow money, then I'm going to go borrow money. I'm going to do that. Businesses are going to go borrow money. Homeowners, private investors are going to go borrow money, pumping liquidity into the system. This is how it starts. This is how it happens. And so let's have a look at M2 money supply compared to Solana. Let's have a look at what Solana does. We have Solana here in red, money supply here in white. As money supply goes higher, Solana tends to follow that higher. As it goes down, Solana goes down, and there's a connection here. Let's have a look at Ethereum. Ethereum in red again, money supply in white. And you can see as money supply goes higher, Ethereum tends to go higher. And again, looking back to this chart, it makes me very bullish to see Ethereum as the most sensitive to liquidity shock, because when you zoom out and you look at the bigger picture, what is the path to alt season? It is Bitcoin. And then after Bitcoin, it flows into Ethereum. After people make their money on Ethereum, once Ethereum goes higher because of higher liquidity, liquidity goes higher because of more rate cuts. Do you see where I'm going with this? More rate cuts brings us closer to alt season. So we're looking very good here. Ethereum down into the large caps, into mid caps, small caps. I'm sure many of you have seen this chart. If you haven't seen this chart, I encourage you to screenshot this, save this, put it on the fridge, put it on your bathroom mirror, and remind yourself what's coming. If you're worried about altcoins not performing well, if you're worried about your bags maybe even being down, don't worry. I'm down on some of my positions as well, and I've been here since 2023. The reality is the things that make us bullish, the things that make bull markets happen are still ahead of us. Rate cutting cycles. If you've been on the channel, you'll know that the business cycle is still in front of us. We're going to do another update on that later next week. You know that the things that drive bull markets, that make altcoins go higher, are still out there. They're still out there somewhere, and they're coming to us. They really are. We don't have to chase the gains. The best method to investing is buy spot and hold. Let the market come to you. Let alt season come to you. And when you look and you see what is out there, when you see the developments that are coming our way, you stay very, very bullish. And I'm very bullish. And I hope this makes you bullish. And if you subscribe to this channel, we are going to consistently bring you macro updates that will make you very bullish, give you the conviction to sit comfortably through the volatility. So go ahead, like and subscribe down below. Leave a comment. Let me know what you've learned. As always, thank you for being here. We'll see you in the next one.